Welcome to Investors Guide. You're watching ET Now. Thank you so much for joining us. This is the show that helps you find the perfect investment products in the market by looking at what suits your needs best. A quick reminder, we are looking at doing a special for all of our retired viewers soon. So if you're retired and you want to know where you should be putting your money, send us an email. Email ID is at the bottom of your screen. On this show this week, we'll start off by telling you where to invest your money to save for your daughter's education. In our product review, we look at the Birla Sun Life Mid Cap Fund, and we'll tell you if you should be investing your bonus or using it to pay off your loan. Let me bring in Dhirendra Kumar, the CEO of Value Research and our in-house mutual fund expert. Dhirendra, thank you so much for joining us. Let's get straight to our portfolio versus portfolio question. Suvesh writes in from Hyderabad. He tells us he has a term cover and he also invests 60,000 rupees a year in the LIC Jeevan Saral. 60,000 rupees also in the Public Provident Fund account. Then he has normal goals like any young person. He wants to create a corpus for his daughter's education and for her wedding and also for his own retirement, all of this in the next 15 to 20 years. He wants to know if he should hold on to that Jeevan Saral policy, and he sent us a list of his mutual fund investments. He has the HDFC Top 200, the Mirae Asset India Opportunities. He also has HDFC Mid Cap Opportunities and IDFC Premier Equity Fund. Now, given his portfolio right now, just looking at the mutual funds, Dhirendra, should he continue those investments?
I would say that, he has chosen great funds for this time frame, and he should just, review his positions every year. And that apart, I don't find any, this is an outstanding portfolio, and he should try and, look for a larger cover, given that he is paying an EMI of 22,000 rupees for his home. But his fund selection seems to be on track given his time frame and the goals he is investing for.
But Dhirendra, if you take a look at his Jeevan Saral policy, he wants to know if it makes sense to continue that investment. What would you recommend he does with that investment?
One is that, he doesn't need it in the first place. He has adequate, term cover. That apart, if he finds that, he should go for a home loan term cover where the coverage actually goes down with your repayment of loan. So after that, I really wonder that there is role for Jeevan Saral in his portfolio, and he should just work out a planned exit strategy for this.
All right, so exit the Jeevan Saral plan, but the rest of your portfolio seems on track. And like Dhirendra obviously tells us on this show, what you must make sure you do is review your portfolio every year or so. You can get back in touch with us if you have any more questions. Our next question comes in from Gajanan, who writes in, he's been investing 12,000 rupees in these funds and he wants to know if they're on track. The idea is to create long-term wealth, Dhirendra. He wants to increase his allocation right now to 25,000 rupees and he wants to know if he should continue with the same funds. Right on top of his list is the Birla Sun Life Infrastructure, Reliance Regular Savings, HDFC Top 200 and Mid Cap Opportunities, IDFC Premier Equity, and Franklin India Blue Chip. Now, the only thing I'm worried about on that entire list is the first fund, the Birla Sun Life Infrastructure Fund. Would you recommend he continues that? Does he need it at all in his portfolio?
Yeah, I think, what happened 4 or 5 years back, that infrastructure funds were on the forefront. A lot of investors bought into that. But this is nothing but, I would say that any diversified fund which is little less diversified by not investing in pharma and technology becomes an infrastructure fund. So, and I am not very hopeful that these funds will do very well despite the, they having a leeway to, diversify themselves reasonably. So, and they have no such role in an individual's portfolio, and there is nothing which stops his other funds to be tilted to infrastructure stocks as and when it is opportune. So, he can do for this reason, he should actually stop investing and take his money out from the infrastructure fund. The other 5 funds he has chosen are doing so well, and they look so promising that he should not consider adding even one more fund here. He should just increase the amount of investment he is making proportionately in all the 5 funds.
All right, so the 5 funds are on track. All you have to do is get rid of that one infrastructure fund and you're good to go. We have one more question from Jay Chawla, who writes in from Chandigarh. He's 55 years old. He tells us he's a regular viewer of the show. He's been watching for the last 3 years. He has a corpus of 25 lakh rupees, to which his son is a nominee. He's invested this money, Dhirendra, in a blend of equity and MIP mutual funds, and he's currently working with a dividend option because he wants to get an income from that, from those mutual funds. But he's been informed that mutual funds are non-transferable, and he's worried that after his own time, he wants his son to receive the dividends on this investment. Do you think that just putting the name of his son on the nominee list is enough? That's the question he's asking.
Yeah, I think, putting the, the nominee will be the natural successor of all his investments if he's the nominee, and that is the purpose of it. But if he's trying to ensure that his son gets only the dividend and is not able to liquidate the principal, that may not be possible, because the successor will have complete right on the what to do with that investment, including the principal.
All right, if your son is the nominee of your investment, he will inherit all of the rights on that fund along with the dividend, which means that he'll be able to sell it or hang on to it as per his choice. Coming up after the break, Dhirendra is going to stay with us. We'll talk about the Birla Sun Life Mid Cap Fund. Don't go anywhere. Welcome back. You're watching Investors Guide in ET now. Thank you so much for staying with us. Dhirendra Kumar is still with us in our Delhi studio, and it's time for our product review. And this week, we're looking at the Birla Sun Life Mid Cap Fund. Avan is here to give us a quick introduction. Avan.
Thanks for that, Faye. Well, the fund manager uses the growth-oriented approach to pick his stocks, using valuation techniques to narrow down his selection, but his criteria is flexible, allowing for other investment ideas and sector bets as well. Individual stocks do not exceed 4% of assets, and less liquid stocks are capped at even lower limits. The fund had a very good year in 2009, delivering a return of 120%. But it struggled to even match the category average for 3 calendar years that followed until 2012. This year, the fund has fallen 3% more than its category average, settling at number 70. Let's bring in some numbers and do some math. If you invested 1,000 rupees in this fund when it launched, you would have 10,809 rupees today. So should you be investing in this fund, or should you pull your money out? Our experts are here to give you the answer. With that, it's back to you, Faye.
All right, Avan, thank you for that information. Dhirendra, you've rated the Birla Sun Life Mid Cap Fund on Value Research as 2 stars. And given the fact that you've told us the best way to really watch for a mid cap fund is to see how it performs in a volatile market. Now, we've had nothing but volatile markets for the last 1 year. How would you rate the performance of this particular fund over the last 1 year?
I would say that, compared to any benchmark, the fund looks impressive. But relative to, but the mid cap universe, the number of funds in the mid cap category, and the number of funds which are able to, the universe of stocks in which the mid-cap funds can invest is large, and the difference brought about by different fund manager is huge. Unlike the large cap funds where the best performing fund or the worst performing fund, the difference may not be as significant. In the mid-cap universe, it could be very significant. And from that standpoint, relative to many other funds, this fund is extremely disappointing. When it comes to giving consistent return from a mid-cap portfolio and beating its benchmark, this fund has done a reasonable job. So when it comes to investor choosing a mid-cap fund and trying to derive a significant meaningful return even in a bad market, there are funds which have been able to deliver significant return even over the last 3-4 years, including last year.
Dhirendra, this is the question that we really should be asking at this point. You always tell us that we should be looking at diversifying across the market. So in a market like this, should we look at just investing in a mid-cap fund, or should we only use multi-cap funds that spread across the entire market?
I think in all times, one should be choosing fund depending on what your attitude to a declining market or, a bad patch of the market is. There are investors who lose their sleep. Those investors should be into, large and mid-cap fund, diversified vehicle, and, investors who don't want to manage their portfolio very intensely or they get very upset with a significant decline in the portfolio value, they should not be investing in these funds. But investors who are fine with, ups and downs in the market, and they are willing to assume that volatility for significantly higher return. And when we look at, the mid-cap fund universe, the best performing fund on a 5 or 10 year basis might be giving a return which is substantially more than a large cap fund or a large and mid-cap fund. And that is what investors are aiming for, and that is what these funds are able to deliver. For that, it is important that, you choose fund managers who are imaginative. At the same time, in mid-cap funds, the fund manager can also go out of favor, and you have to be watchful. Look at the process and look at, you have to at least review your investment every year and make changes accordingly, which is unlikely to be the case when you are choosing a large cap fund or a large and mid cap fund.
And finally, Dhirendra, your rating of the Birla Sun Life mid cap fund, where would you place it?
Given that, they're very impressive funds over the long run as well as the short run, I would give it a 2-star. It is not an advisable fund to have.
All right, 2 stars for the Birla Sun Life Mid Cap Fund. Remember, Dhirendra told us that even a time like this or any other time in the market, it always makes more sense to pick a multi-cap fund that invests across the market as opposed to picking a mid-cap fund that focuses on a specific area. Let's move on now to our hold or sell segment. Sunil has written in, Dhirendra, he has a monthly income of 1.25 lakh rupees. He's been investing 17,000 rupees a month in mutual funds over the last 3 years. He wants to know if his portfolio is on track to create long-term wealth. It seems like an impressive combination of funds, and these are funds we hear on a regular basis on this show. Right on top on that list is the Birla Sun Life Frontline Equity Plan. It's also followed by the HDFC Top 200 plans. So the range of Frontline Equity and Top 200, hold on to both of them?
Yeah, hold on to both of them, and be watchful of HDFC Top 200. It has been a laggard for a while, and I would say that one should be watchful about how it does in future and in recent future, because there might be a time when one has to take a call. But yes, these two funds are worth continuing your investment for now.
Well, for someone who has a 20 to 25 year horizon on this investment, HDFC Prudence is also on his list, Dhirendra. Should he continue that investment as well?
No, the fact that one has HDFC Top 200, I don't see a role for a balanced fund in the first place. At the same time, the kind of overlap one has with this fund, I don't think this has a justified place in this portfolio.
Well, the next fund on his list is the IDFC Premier Equity Plan, and this is one of those funds, Dhirendra, that you were just talking about, multi-cap spread across the market. Should he be holding on to this fund?
Yes, this has been a very promising fund, and it has been able to guard its performance through the lean period very impressively. So certainly, if in these times it has been able to make a name for itself through the difficult time. Yes, it's a must-have in this portfolio.
The last fund on his list is the Reliance Growth Fund, Dhirendra. Would you recommend he holds on to this one?
One can continue, but it has been a very disappointing fund for a long period now, and unless the market turns around, I am not very hopeful that this fund will be able to beat it. This fund has on many occasions also struggled to beat its benchmark, which has not been very difficult for most of the equity funds in India, or reasonably performing equity funds in India. So unless we think of a market turnaround, it's a very difficult fund to recommend or justify in one's portfolio today.
All right, so on your screen right now are the funds that Dhirendra recommends you do hold on to. And if you have any more questions, you can, of course, write back to us. Email ID is at the bottom of your screen. We have time for one more question. Baiju has written in. He invests 2,000 rupees a month for the next 15 years in mutual funds. He wants to know if the ICICI FMCG fund is a good choice. And this is interesting, Dhirendra. A lot of viewers tend to make their decision based on recent performance. And we know that FMCG, pharma and IT funds have done really well over the last 1 year. Is that reason enough to invest in these funds?
No, not at all. If for 15-year time frame, if you are investing, yes, last 3-4 years has been very good for FMCG stocks, and so these FMCG funds have come on the forefront. But there will be time, over the next 15 years when FMCG will struggle and everything else will do well, or FMCG will deliver moderate return and everything else will do well, and that is the time when you will be deprived of all the market movement. The principle to follow is invest regularly, diversify, and this is where this fund does not qualify as an eligible investment. Choose one good, well diversified fund, and maybe a fund from our aggressive growth portfolio, and continue investing regularly. Don't look at last 1.5 year or 2 year performance of these funds and make a choice.
All right, so don't go by the last 1 or 2 year performances. But Dhirendra, for someone like Baiju who's looking to invest for the next 15 years, 2,000 rupees a month, so obviously he wants one fund to invest in. What would you recommend he uses?
I would say that funds like Prima Plus or funds like UTI Equity, funds which will invest all over the market, and he should certainly not invest in he should not start with a sector fund or a thematic fund for a 15-year time frame.
All right, so not a sector fund or a thematic fund. Dhirendra, thank you so much for joining us on the show and answering all of our questions. We look forward to sitting down with you again next week. Coming up after the break, we'll tell you where you should be investing your bonus to get good returns. Stay tuned. You're watching Investors Guide in ET now. Thank you so much for staying with us. It's time for me to bring in Vishal Kapoor, our asset allocation expert who joins us on the show. Vishal, thank you so much for joining in. Our first question comes in from Celestine, who writes in saying she will get a bonus soon and she'd like to make a smart investment with that money. Now, she already has health insurance and life insurance, and she has a home loan for which she's paying back 25,000 rupees a month. Now, would you recommend she uses the money to pay back her home loan, Vishal, or should she be using the money to invest for the future? What's your recommendation?
Celestine, firstly, congratulations on the bonus. Now, the investments, we saw that you've already got your Section 80C tax benefit related investments done. You've got yourself a home loan, and you've got some share investing experience, which is a start. Now, what we did not see was whether you have a term insurance or not, and we don't know about your health insurance. So these were the two things I would suggest that we look at first. You could use a part of this bonus to get yourself a good long-term term plan, and also use some bit of this bonus to get yourself a health cover. Now, health covers are now available for up to 3 years, so you could actually prepay some bit of the health plan, and you get a discount on paying in advance for a longer period. So those would be two things you could get started with. For the remaining amount of your balance, one way to approach the market may be in a spread out systematic way, and I could recommend a systematic transfer plan to you. In this plan, you would put the balance amount that we're trying to invest into the market into a liquid or a debt fund, and gradually over a period of time invest in equities. By doing this, we are trying to benefit from cost averaging, so that we are not focusing on equity investments from a timing perspective and really being worried about whether the markets are high today or low today, because you're spreading it out. So that may be a plan that could be appropriate use for your bonus. And of course, try and save some money and spend it, because at the end of the day, this is a bonus, but not a lot. Try and spend some bit of this and enjoy yourself.
Our last question comes in from Pushpal. Now, Pushpal has a very interesting question for you. He has 2 ULIPs he's already invested in. He has 2 running mutual funds that he's investing in. Both of them are tax savers. He has a home loan like any of us would. He wants to know where he should be investing his money so that when he retires at the age of 60, he'll have 2-3 crore rupees just in savings, which means he doesn't want it to go into an annuity. He doesn't want to be forced to put money into any of those instruments. So Vishal, if he wants just savings on retirement, does it make sense to use land or property or just mutual funds? What's your recommendation?
Pushpal, what we see from your current investments is that you've got a savings of about 5,000 to 6,000 rupees per month already established in the various forms that you've got across ULIPs, PPF, as well as some of the tax saving funds that you've bought so far. We also note that you've got yourself a house and you're paying an EMI for the loan. So in looking forward towards your goal of achieving a retirement corpus of 2 to 3 crores, you would need to start saving about 9,000 rupees per month or so, assuming that you have a 30-year saving term from where we are today. Now, since you're already saving 5,000, you could look at extending the savings a bit. As your earnings increase over the years, you should be able to do that. Around your question on whether to do that, an LIC is the best option, not really, because an LIC is really a protection product. So I wouldn't recommend that as your primary vehicle for a long-term savings plan. Could you buy land and more real estate? You could, but that wouldn't be recommended because you've already got yourself a loan. So as you save more and you have more capacity to sort of earn more than the 9,000 rupees saving that you have right now, you could actually pay off your existing home loan. So an SIP across a range of funds may be the better bet for you right now. Now, to get a specific portfolio, we would have to risk profile you. You are young, you could take a large amount of risk, but exactly how much is something that an advisor would be able to do. Starting off with a set of large cap funds may be one way, but that's not the only way. So you could look at an aggressive or a growth oriented portfolio, and maybe the one that we have on this show is a good way to start.
All right, Vishal, thank you so much for spending time with us this week and answering all of our questions. Now, if you have a question for Vishal Kapoor, write to us. Email ID is at the bottom of your screen. You'll also find a copy of this show on our Facebook page, and you can reach me personally on Twitter. Thanks for watching.